Hello YouTube, my name is Jim Baker. I'm a CPA, Mata and Baker Tax Consultants, and I'm just making this video right now to tell you a little bit about cryptocurrencies. And for this talk today, I have my lovely assistant Elizabeth, who's going to ask me a couple of questions that she has and that other non-cryptocurrency people have. And let's just get started, Elizabeth. What's
Yes,
your first
in
question?
honor of Women's International Day, right? I have a few questions about cryptocurrency, so thank you for having me
Yeah,
here.
sweet plug. So, what do you got? I know you have some questions.
Well, can you explain exactly what is cryptocurrency? It's like an electronic form of currency. I don't know. I hear so much about it on the news.
Oh, good question. I guess we'll take a step back before we even talk about what the all the other stuff. So cryptocurrencies aren't necessarily currencies. People call them that. The main one is Bitcoin that has the biggest market cap. Bitcoin is actually just holds value. The value is not the value is intrinsic. It's just whatever people say it is. It's supply and demand value. And many of the other cryptos have are just some kind of money replacement, or they just people give them value. But most of the altcoins have some kind of alternate purpose, and they have some kind of there's a reason that they exist. So Ethereum, Ether is what they call Ethereum, and that's the second biggest right now cryptocurrency, and that it's called a cryptocurrency, but they use the platform and they use the coins to develop software, tools, other blockchain-oriented services, and many of the other cryptocurrencies, the altcoins, are based on the Ethereum network. You know, that's the point of the blockchain, and that everyone likes is you can't change things.
Yeah, and the best part is that I don't have to pay taxes, right, on cryptocurrency?
Oh, is that a question or is that a statement?
Well, right? I have to pay taxes on that?
Oh yeah, great question. So, yeah, when you have cryptocurrencies, if you buy a Bitcoin, that's whatever you paid for it is what it's worth to you, and that's your cost basis. So if you sell it, then the price you sell it at minus whatever you purchased it for is a taxable gain as of the date you sell it. And this isn't limited to just sales, it's limited to any kind of transfers. If you use it to buy something, if you convert it into another type of coin, or if you you just get rid of it in some way or form. If you just lose it, if it's hacked from you, then it's a loss. But that's a casualty loss, and you only get to deduct, depending on your circumstances, the value you paid for it. So I guess that was a tangent there, but yeah.
So it is taxable. I heard like cryptocurrency, like anonymity purposes, and that's what I hear. I guess I shouldn't be taking my tax advice from like word of mouth.
Yeah, you take it from word of mouth from your grandma. No tax advice from grandma. Yeah, so there's other kinds of ways you can generate income from cryptocurrencies as well. When there's a fork and you receive free coins, either it's a gain when you get it if there's a value when you receive it, or when you sell it, you pick up the gain then. So it's those two. If you're mining, you're getting coins, and the fair market value of the date you mine the coin is what you would have as income. But when you're mining, you can deduct your expenses. So that's a beneficial thing. You know, you can take some expenses and realize less income.
But if I'm a foreigner, I don't have to worry about reporting anything or taxes or none of that.
And yeah, if you're a foreign person, if you're not from the U.S., because I'm a U.S. tax professional, we have attorneys and people we work with in South American countries, some in Europe, but in the U.S. specifically speaking, if you're not a U.S. person, you pay no taxes in the U.S. And if you are a U.S. person, one thing you do have to watch out for is the foreign reporting for the foreign exchanges. Most of the exchanges, I'm not going to say most of them, everyone uses Coinbase in the U.S. That's a U.S. based exchange. I think it's out in Silicon Valley, and that's a U.S. based exchange. But all of the other exchanges, I use Binance personally, and then they have like Kraken, and they have all the different exchanges out in Japan. There's a huge market. They have Taiwan, China, Hong Kong, and if you have assets in those exchanges, and your balance was over 10,000, like cumulatively, if you have 5,000 in like 4 different exchanges at the highest point during the year, even if you had 5,000 and you put it in Binance, you moved it to Kraken, if you move it to any of the different ones, the highest value during the year of all the accounts, you'd still have to report all of those because the cumulative highest value is higher than 5,000. And there's big penalties that you would have to pay if you don't report this and you don't complete this.
Right.
So, just in summary, cryptocurrencies are here. They're here to stay. If you basically anything you do with your cryptocurrencies other than keep it in your wallet is taxable, and you need to report that. Oh, what I wanted to mention was Coinbase specifically is actually they sent 13,000 names of people who have been buying and selling cryptos on their exchange, which their exchange is limited to, at least as of the moment, is limited to Bitcoin, Bitcoin Cash, Ethereum, and Litecoin.
So they send it directly to the IRS, that information?
They sent information on 13,000 people randomly showing that they had trades, and these people definitely need to. Well, first of all, you won't know who you are until you don't include your gains from crypto. Even if you have losses too, report that. You can get a deduction for it. But if you had gains and you didn't report it, or you didn't even include it on your return, I imagine that you will get a letter from the IRS this year, especially if Coinbase submitted information to them on your behalf.
Do you think the IRS will be tracking down more on cryptocurrencies and altcoins?
Yeah, especially I think if you start reporting now, it's going to help. But going forward, if you're reporting now, they might give you the benefit of the doubt, even if you're doing it wrong. But many people are going to be taking aggressive positions, I imagine. Section 1031 exchanges for like-kind exchanges, I think people are going to try and do that because it's technically property, and they might say like, look, I upgraded it, I'm deferring the tax, and I think that'll get disallowed, especially with Trump's new tax plan. They put some provisions in there for that specifically. That's a little high level, but it's still something to talk about.
And if I hold on to it, I actually purchase it, I don't sell it, then that's not taxable. So
yeah, if you just buy something and you hold it, it's not taxable, and if you hold it for a year before you sell it, you get preferable tax rates. So the buy and hold actually has a planning aspect to it. If you believe the whole market's going to increase, don't just keep flipping everything. Buy some and hold on to it, and it'll be you can pay less taxes on it. So before we get this video too long, I want to just say that. And if anyone else has questions, just comment below and I'll try and answer. I'm not necessarily the fastest at responding, but if you watch this far, then you have at least some interest. So thanks for your time, and don't forget to subscribe and like and share.